Hello and welcome to another daily market update by Market Intel. Today we want to take a look at another cryptocurrencies chart, specifically a AI coin, a very popular AI coin, and it's Fetch.ai, and we'll take a look at the chart. Let's go. Okay, we are here on our website, dailymarketupdate.com. We click on our cryptocurrencies section. As you know, you can register here completely for free. You get access to not only crypto updates, but also updates about stocks and, for example, the S&P 500. Now, let's take a look at the long-term chart first. I believe we haven't done that for a while. Just to get everybody on the same page, the idea is that FET, Fetch.ai, is currently in a bullish structure. We're tracking this as a so-called, on the larger time frame, we track this as a so-called 1-2-1-2 structure, which means that we are now in magenta wave 3. And often people ask, what is a 1-2-1-2 setup? Well, it just means that, the wave 1 goes into the direction of the trend, it's clearly up, and the wave 2 is a corrective pullback. And as long as pullbacks remain corrective in nature, overlapping slow downside momentum, at least compared to the impulsive looking increase, and as long as they are holding a higher low, that could be a wave 2. There are many rules and guidelines around this. Not so many rules, more guidelines. But then we can call that a so-called 1-2 setup, which would indicate we're watching for a third wave rally, which, as we know, is often the FOMO-driven rally, so fear of missing out, because a lot of people don't believe that the market will continue this rally, or some might, but obviously it catches a lot of people off guard. I mean, that's really what it's about. This is in different market phases, different, but this here would kick off the third wave. Now, you have already seen this rally here, which was quite substantial, and this is already part of the larger degree third wave, magenta wave 3, which is why this was already quite aggressive. Now, the main element, the third wave, is then even more aggressive if this interpretation is correct, and it should take us to at least $6.20, $6.24, plus minus a few cents, depending on the exchange, but that would be the first ideal target for this third wave. Now, we can't say when this will happen, but usually such a third wave is quite fast and quite aggressive, so it can catch a lot of people off guard. They have to chase, which is exactly what a third wave does. It encourages people to chase, so it's that FOMO driven wave. People who don't have a position, they then have to catch up. They have to try to jump onto the train that's already left this station. Now, this here is the shorter time frame chart, and you can see that we are dealing with a shorter time frame long trade setup, or it's a long trade setup. Here we have a trading area. I mean, we can't tell you to do that, to take a trade or anything, but what we do is we tell you where the price has a good chance of reversing. So what we don't want is that the price breaks below that red line very clearly at 69 cents. That would be an invalidation point. But actually there's a trading area between $1.09 and 81 cents. So this is an ideal support zone that the price would ideally test and then reverse to the upside from there and start the next rally to the upside. At the moment, we assume the price would dip a little bit lower. We see that likely with a 63% likelihood. We assign a 37% likelihood for a direct breakout potential. I mean, as soon as the price breaks above these previous two lines in green, well, we're likely in a direct breakout. Okay, it would then be a little bit sooner than expected, but as you can see, we're not far away from that key support area, from that key trading area, and therefore, therefore it can happen at any time. Basically, it's not necessary that the price forms that one more low, but it appears likely because really, I mean, this structure is a mess. From that last swing low here, it's just been moving sideways, and the last rally was also from the December low, right? That this was just a 3-wave move up, very choppy, very difficult structure. It's essentially just a sideways range. We just need a breakout to the upside, but what we don't want in our scenario, which is bullish, even though we are watching for a little bit more downside before that recovery rally occurs, we really don't want a move below the 81 cent level and definitely not below 69 cents. So there's a difference between support and the red key support level there. So Fibonacci support is ideally not broken, but really what must not happen is a break below that red line, or we would have to reinterpret the chart. At the moment, we're looking for higher in both scenarios. So either here in the directly bullish one or the one after one more low, which we see as a little bit more probable. But overall, we are watching for the price over the, not weeks necessarily, but over the coming months. It can take a while, but it's difficult to say how long something takes. So it's not a time-based method, it's a price-based method, but we would like to see the price move towards that $6.24 plus area. That's the update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, make sure that you register on our website. It's completely for free and you get access to all of these Elliott Wave updates. And also let me know which other cryptocurrencies you want me to cover in future videos. Thank you very much. Bye-bye.